everyone, it's Daniel here from Infovest. Hope you're all doing well. Got a good one for you. I'm going to post this article for you in the description so you can read up on it. But this is a CNBC article and it basically says credit card balances jump 15%, highest annual leap in over 20 years as Americans fall deeper in debt. Right, so I'll go through this through the key points. As day-to-day expenses continue to rise, Americans are taking on more debt. An economy that has produced the highest inflation rate since the early 1980s, Americans are struggling to keep up with day-to-day expenses. More consumers are now relying on credit cards to get by, which has helped propel total credit card debt to $930 billion in the third quarter, which is just shy of all-time record according to the report from the Federal Reserve Bank of New York. Credit card balances climbed more than 15% from a year earlier, the largest annual jump in more than 20 years, with prices more than 8% higher than they were a year ago. It is perhaps unsurprising that balances are increasing, the Fed researchers wrote in a blog post, which you can take a look at in that link. The real test, of course, will be to follow whether these borrowers will be able to continue to make payments on their credit cards. Now, how is this possible? How is it that you have tightening, the interest rates are going up, and people are still spending, and credit card debt is going higher, and they're spending and retail sales, if you saw just recently, retail sales came in stronger, and if you see consumer sentiment is still high up there in the positive numbers, giving good signals that everything is fine, and that Walmart is posting stronger than expected earnings. How is that possible? And this is your answer. This link right here is your answer, is because they're borrowing money. They're borrowing more than before at high levels. And they're taking their credit card and that debt, and what are they buying? They're buying the essentials, because the essentials have now become expensive. You look at food, you look at groceries, you look at almost any item out there in these stores out there, they've been going up. So this is definitely a very bad sign. When you look at GDP, consumer spending is about 1/3 of GDP. Consumer spending makes a big portion of the economy. On top of that, real estate as well. So if you have a lot of consumers out there piling on debt, doing all they can to get credit cards and, delaying their payments for a very long time, what do you think's going to happen in 2023 when the demand really crunches because they've stacked up all on this debt? The banks are not giving any more fresh credit anymore, and they're stuck making payments. And for the worst part, where unemployment rate increases and people lose their jobs. This is very sad and scary for what is to come in 2023. I'm very worried. I really hope it doesn't go down that path, but the signals, and these are some leading indicators that when you hear consumers' credit card debt at all-time highs, and we haven't even talked about the fact that their credit card debt is all-time highs, and you have rent and real estate, their shelter expenses moving up high as well, and that's bringing in a lot of pinch for people who may be renting or for people who own mortgages on variable rates or what have you. Definitely, it's going to bring a lot of pain for a lot of people in the next year. And real estate is a big component of driving higher growth in the markets. It makes me think that if consumer debt is going to basically crunch and are at all-time highs, and inflation's still high, shelter is still high, rent is still high, and these rates are still elevated, and what did the Fed say? We're going to keep interest rates higher for longer. What is the bond market pricing in? Interest rates are going to go up, plateau, plateau for longer before the pivot happens, before the cut happens. So that pain of higher rates, pain on your debt, experiencing, maybe job losses, have to pay your rent, have to pay for food that is expensive, have to pay your mortgage, which again, rates have gone up. That's going to create pain for a long time. And the Federal Reserve, Jerome Powell, the chairman, did come out and say in August during the Jackson Hole Symposium, if you remember, I did a video on that as well, highlighted the words. I read through his whole speech. You can take a look at that video. He came out and said that this is the unfortunate cost of bringing inflation down, that households and businesses will feel pain. And a lot of central banks around the world have been saying the same thing. They will feel pain. But the fact that Jerome Powell said that in the meeting in August, word for word, and you can print it out, and I posted a link there and you can read it up, just goes to show that they want to bring pain in order to bring inflation. They got a job, they want inflation to come down to 2%. If you're borrowing a lot of money, you have a lot of debt, interest rates are going up higher and they're expected to stay up higher for longer. It's not looking good for 2023. Like I said in my previous video as well, 2023 is going to be the year for the rude awakening. And I really hope, anyone who's watching this video, that, you don't end up in that situation. Please, as much as you can, pay off your debt, get out of debt, do as much as you can to pay that off, create some savings on the side, some cushion on the side. It doesn't look good for 2023. All the indicators that, we could sit here for hours and look at is all pointing towards something very negative in 2023. The best thing you could do is pay off that debt, get rid of debt, increase your cash hoard. Bezos, founder of Amazon, said the same thing. Hoard on cash as much as you can. Same thing with businesses. Hoard on cash as much as you can. Delay those purchases, those expensive purchases that you want to make. I know it's tough because of, in the US, Thanksgiving, plus now you've got Christmas coming up as well, right? And you need to go out and spend a lot on presents, or maybe go on vacation. Maybe give it a second thought. But definitely it is not looking good for 2023. So pay off the debt, accumulate cash. That's what I've been telling people a lot. Also in my chat room, my subscriber chat room as well, on Discord. Save the cash, because these economic indicators and news like this, which are leading indicators as well, is not pointing towards a good direction. Sure, right now you can pay, use credit because it's free money right now. It's not really free, and it's not very cheap as well. But just because you have access to it doesn't mean you should go out and swipe like no tomorrow, especially during Christmas time. So be very careful, guys. Hope this helps. Leave a comment below of your thoughts. Subscribe, hit the like button as well, and bell icon to be notified on the next video. Cheers.